Good morning, folks, and welcome to another one of my videos. So I just have the one pair on watch today, and that is dollar Swiss. The market looks like it's forming some deeper corrections at the minute, so just letting price do its thing, and then we'll reconvene where those pairs are concerned once the market has shown its hand a little bit. The only one that really interests me at the minute is dollar Swiss, so that's why I've only got this one on watch. So why am I looking at this? Let's break it down. So I'm looking at this, I'm zooming out, and I'm seeing that what I'm seeing here is we have a lot of volume here. So we have a lot of volume here. We have a lot of volume here because there's a sharp move. Okay, so usually volume is dictated by either a very sharp move or a very large, wide consolidation like that. Okay, so what have we done? What's price achieved? So here it was looking like we may, because this was a potentially a significant area for a buy. I'm just going to go into slightly more detail with regards to my thought process, just because I've only got the one pair on watch. So here, especially after this bullish candle, it was looking like this might have just been the sellers caught the wrong side of the market, and then the buyers stepping in at a discounted price. Okay, bargain prices. However, what if you look at what's happened? We have, after this bullish candle, we kind of retested the back end of all of this. So if when we're below here, many people believe that this now acts as resistance. I always struggle to get this right in my mind. If they believe once we've broken below that this is resistance, there'll likely be a lot of stop orders on stop loss orders just above. Okay, if you look at what happened, we likely took them out and moved to the downside very aggressively. So what I'm seeing here is that since it appears that we've taken all those stop loss orders out, this to me looks like, before I've even drilled down, an impulse correction, potential continuation to maybe come back down and test these lows, and then maybe we get kind of double bottom bounce from there where we move to the upside, or we form continuation to push lower to take out this sharp move, this all-time low there, which was created back in 2011. So if I just zoom in a little bit, you can see, let's just take all those squiggles off the chart. Okay, if I just zoom in a bit, you can see the consolidation forming there. I can see the impulse to some degree and the continuation. I can see that this candle here retested the back end of this. So once again, once price dropped out, people who believe that this now acts as resistance likely had their stop orders just above. We come back up, we tap those orders and move to the downside. So this is giving me more confidence that an impulse correction continuation to the downside to potentially push down to here is more likely. Okay, and if we just measure, before I've even drilled down, if we just measure this impulse here and we take it to there, we know the continuation leg out of a correction tends to be of a similar length. What do you know? That lines up mathematically almost perfectly with that low there. Okay, and if we were to measure it from the break, because a lot of the time the volume that's been generated within a correction can dictate how far price actually moves, that would take us down to about that region. So that ties in mathematically as well. If we just zoom in, what do we see? We can separate these structures. Okay, so we have this impulse down. You can see that price left a footprint there. It came back up, tapped into that, likely spiked out all of the liquidity there. We then get this, doesn't really tap into anything, but what happens here? This is key, actually. I wanted to touch on this. Let me just go to the 1 hour. This is slightly more prevalent to the 1 hour. So we have all of this consolidation here, which really is just one big channel. And then this exchange of liquidity here. So there was a sharp move. And the reason this is very significant in terms of all of this is because the exchange of liquidity that took place here was enough for price to smash through all of this and break through this sharp move here, okay, and go on a big sell to the downside. So that tells me that there must be a lot of liquidity there because of what price achieved after that exchange of liquidity was achieved, okay? And the clue for me, there was another clue, okay? So we had a correction which formed halfway within this range. So when we get a correction which is halfway between here and here, that implies that this impulse correction continuation is going to finish here, which implies that once again that's where the liquidity likely is. And of course, if we measure that, it lines up perfectly, okay? Almost perfectly. So of course we tap that area, then we move to the downside. We see evidence of a little bit of stack in here. So I'm looking, Where are the bigger players stacking their orders? We see some stacking here. We have an impulse correction continuation, little consolidations along the way. And what we can see now is this big consolidation forming. I am mindful of the fact of how wide this is getting. And the reason I say that is because when these moves become very wide relative to the move down which had preceded them, they increase in neutrality. And my guess is one of the reasons for that, what I mean by increasing neutrality, is that the move to the downside starts to become less likely. And my guess would be that many of the people that are holding their sells through all of this just get bored, close their positions, which causes price to inflate to the upside, which is where, when we get the M style pattern, price taps the high again and then moves down from there. We see that a lot. Okay, but for the moment, at least, because we still have structure to work with, and more specifically, we have this high. We have this high here. It wasn't really broken. Then we gap to it. We left a gap. We've just left another gap. Where do you think? So once we created this high, these people that are selling here, where do you think they've got their stop loss orders? They've likely got their stop loss orders just above here. And every time we get close and we don't quite tap that area or break above, the price moves down correctively. Why is it moving down correctively? Likely because when these people are trying to sell it, the orders that are still up here are dragging price back up. Okay, so what a lot of this is FOMO. Okay, we don't know all the reasons why people are selling here, but one of the reasons is certainly FOMO. They can't wait on their hands. They can't wait for it to get to the area that they've identified as their area of value, and then they think it's okay. I'll just get in early, and I'll have my stop loss above there. Okay, and then a lot of the time they get wiped out. Then their psychology is affected, and then they don't re-enter because they were affected by the previous loss. So what I'm going to be looking for at this moment in time is I'm looking for, so if we just put that away a second. So the first question I'm asking myself is, what's the highest time frame that I can see the structure on? I can't see the structure of this on the daily. It's just a consolidation, but I can see the structure of this, the component, the highs and lows on the 4-hour. So therefore, this is a 4-hour structure. So therefore, my 4-hour structure rules are executed or actionable. So what do I mean by that? Well, my rules when a 4-hour structure is present are that I'm looking for a 4-hour rejection here. Okay, so a high test or a retrace candle. Ideally, we get a bit of a break above and break back in rather than just tapping it. Or the other one is 2 1-hour rejections. Okay, so I'll be looking for 2 1-hour rejections, not one, just because of the size of the structure. It's a 4-hour structure. And if we don't get that for whatever reason, or I miss the entry, or price just breaks above like that, and then comes back down in one big candle, then I'm looking for this consolidation, any kind of consolidation there. The lowest time frame we go to is the 5-minute. Those of us who've been trading this strategy for a while. And then I would just target this range. Okay, I would target here, because the 90% area is where we can pull back deeply, even if we're going to continue in the forecasted direction, not the 90% area of a range. So that's why I would target. And even in this instance, I would have, there we go, I'd have 5%. So my minimum when it comes to setting a take profit is 5%. So that just about mathematically allows me to do that. And then I would trail my stop loss at the same time. Okay, and that's all I'm going to be looking for. Once again, that alert that I set a few days ago is still set where it previously was. We have CPI data coming out at 1:30 p.m. UK time from the United States. Maybe that will give this the catalyst to push up to this area, and then maybe after CPI we get the rejection candle or candles, but we shall see. We don't need to know what is going to happen next to make money in trading. We just need to know what we're going to do and how to manage risk effectively. And that is what I would like to leave you with today. Thanks for watching. I hope you've enjoyed this video. I hope it's provided you with some value, and I'll see you again in the next one. Adios, amigos.